Before we get into the details of today's video, can you do me a huge favor and press the subscribe button? I am desperately trying to get to 35,000 subscribers, and you may be able to help get me there today if you press the subscribe button. Hello, everybody. Welcome to the Trading with Ashley show. This is all about Tesla's earnings. So I felt like I must be in the Tesla to talk about Tesla earnings. It wouldn't be right otherwise. So I don't know what earnings is going to bring. I do know the stock has taken quite a hit recently and especially today. And there's a lot of noise out there about what may happen at earnings. I think it'll be more about forward guidance than it is about deliveries, because any investor that's getting into Tesla now is doing it because of the potential of the future of what they're going to offer with the unsupervised driving and the robots, the humanoid robots, whether they be in the factories that we will continue to do or for domestic use. I think that's what most people are expecting out of Tesla if they are an investor now. But with so many unknowns, you can take advantage of that and you can actually get some great premium. So I'm going to go over two potential dynamics for you. One, if you want to go ahead and take the risk before earnings, I'm going to give you the strike price that me and my members use today. And it's so low that if I was able to get Tesla at this price, then I would feel like that was quite the win. So I'm going to go over that. And then I'm going to go over if you decide to sit and wait, and if Tesla pulls back after earnings. Earnings are going to be tomorrow after the bell. So you could put on the first play I'm going to share with you. You could put it on tomorrow during the trading day. The second play I'm going to share with you, you would have to definitely wait until Wednesday to see how they react to earnings before you actually try to put the trade on. And for those of you that don't have a big budget but you want to get into the game, you could look at potentially swing trading TSLL. It's the leveraged ETF on Tesla. Now, I would not hold that stock for long and I wouldn't go in too heavy. It's an ETF actually, and the leveraged ETFs, they decay over time and you have to deal with that. So I'd only do a swing trade with it, meaning your intent was to get in and out within at least a couple of weeks of the trade. So if you decide to trade TSLL, just a word of caution, you don't want to hold on to that too long. But let's go into the first scenario. The first scenario is a sold put. And for those of you that aren't familiar with what a sold put is, that is stating that you are willing to buy a stock, but you're saying, I want it at a deeper discount than it's trading at today. And for you taking your money out of circulation in your trading account and putting it up to actually buy those shares at the strike price that you agree to, you're going to be paid a premium for that. And by the way, Tesla's premiums are so significant, even when we don't have an elevated IV on both selling puts and selling calls. That's why I like trading this, but I like to go very far out of the money, especially if I'm selling puts, because you need a measure of safety with a stock that's so volatile like this. So if you decide to take advantage of the elevated IV that we have generally in the market, coupled with the elevated IV that happens around earnings, then consider going with like a $95 strike. Now, you can look at a variety of different dates for your expiration dates. We went out almost a year, but we did that with the intent of actually buying back the sold put if volatility settles down, or if we do have a dramatic pull down, then on the bounce up when things are heading towards the event going on in Austin in June, as the excitement builds about that, it might offer a great opportunity to exit this trade long before a year from now. So you know from watching my other videos, I like playing volatile events by going further out in time and then getting out of the trade early to release my capital. So that's one way you can do it. If you just don't want to play earnings, it just makes you too nervous and you want to wait, then let's look at two different scenarios. So let's look at the scenario of you already have shares. That's one way to play it. Hopefully those shares are at a price that's reasonable so you can start selling covered calls on them. So if you wait till after earnings, and let's say there's an earnings surprise and Tesla does great and you already have the shares, then you could move forward and start selling covered calls on your shares. Now, you would want to look at going at the very top of the Bollinger Band if there's some excitement around it, and I would only go out a week. myself because I prefer to roll a trade or buy it back and then wait until it recovers and goes higher to pay me back for actually getting out of the sold call. I prefer to do it that way versus going out further in time because it can really get away from you if it has positive events one after the other. So you could, if you have the shares and you want to wait till after earnings, if earnings gets it a pop, then look to sell covered calls. Now, if you don't have the shares or you want to add to your position and Tesla goes down, it tanks, let's say it pulls down maybe even below 200, that might be your opportunity to start to establish a position so that you can then eventually sell covered calls. If you can get Tesla under $200, once some of these future dynamics start coming into play, and they actually have an operating robo-taxi dynamic. I mean, I looked at the stats the other day, and they're thinking that they can build these for about $15,000 each, and that they could each pull in potentially about $50,000 in income a year. So if you can make an investment of $15,000 and get $50,000 out of it, that's a really good business model. So if that comes to fruition, then their future earnings are going to be really significant. So that's what they have going for them. And then when you think about the robot dynamic, if we don't have a lot of manual laborers here in the United States, then they would look to an operation like Tesla to fit the bill and actually have robots doing a lot of the work for the manufacturing that we apparently might be taking on. So I hope this kind of helps shape up some thoughts for you and gives you a few alternatives to trade. If you are interested in seeing all of these type of trade setups, we did some really cool ones today that I think our members are excited about. One of them was telling me, how did we come up with a way to get about $1,600 in premium today in a market like we're having? Well, it's just creative thinking on using options and trying to do them in a safe way, because a lot of you that are interested in selling options, you're doing it because you want an alternative to your 9-to-5 job, or you're trying to grow your wealth for retirement. So for those of you that are interested in joining my community, go ahead and click that link below, and then you could be trading with us as early as tomorrow. And for those of you that are interested in how to properly assess and sell a covered call safely so you can take the most advantage of the stock going up, I'm going to leave that video for you right here, and then you can watch that and learn even more. Remember, if you're with me, Trading with Ashley, there is no trader left behind.